Let's move on and bring on board Star Health Management. We do have Nilesh Kambli, who is the CFO at Star Health and Allied Insurance Companies, joining in with us this morning. A very good morning, Nilesh. Thank you so much for joining in with us. Obviously, we have a lot to talk about in terms of the growth map for the company and implications that one could expect in terms of price hikes that we are seeing as well. So let's get started with that. And the first thing that I want to talk to you about is also in terms of the first look that one can have in terms of the development in the sectors. There are chances of the IRDAI actually that will come up with announcements from the Bima Sugam platform. Now, how do you see this development? How will it impact the overall demand? And correct me if I am wrong, but this platform will help eliminate the third-party agencies and thereby saving commission. How will that be working as well?
When it comes to Bima Sugam, it's an ecosystem which the regulator is trying to create. It will have service as well as sales infrastructure, and it will be available to all the parties, be it agents, brokers, aggregators. So it's a welcome move to ensure that the customer has a free choice in terms of selection of products. When it comes to service as well, there'll be various integrations with KYC systems, hospitals. So it will be a single largest platform to ensure that all the information related to the customers, the policy details are all available. We believe it's an ecosystem and there'll be a play for everyone on this platform. It will ensure affordability of the products as well, wherever there will be a direct link. So it's a good from a customer standpoint, a service standpoint, as well as insurance company standpoint as well.
All right. Morning, I just wanted to also understand your distribution network as well. And I understand that a majority of that comes from individual agents followed by digital channels. Do you think that the digital channel penetration is going to increase?
Yes. So as we speak, we have around 82% agency channel, around 8% digital channel, 5% is coming from bank assurance. We continue to invest in a lot in our digital channels. We see that the Gen Z millennial population is very well, coming up on the digital channel. We see a lot of penetration improving on that channel as well. And we continue to invest in this channel. We believe it will continue to grow faster than the overall growth rate.
Okay, Nilesh, just want to follow up in terms of, how will this overall in terms of the Bima Sugam platform actually start impact? Is there any impact that comes in on demand also? And what does it work out in terms of the profitability? Would you be passing on some of the benefits to the consumers? If you could explain a bit more on that as well.
See, it is in the initial stage, this concept, all the insurance companies are coming together to ensure what will be the best use cases to go live with, both on the sales as well as service front. There'll be definitely some benefits coming on to the customers. India continues to be an under-penetrated market, around 40 crore missing middle where the insurance is not available. Insurance is a law of large numbers. As we continue to penetrate the market, we can provide more and more affordable products. That's the whole thought process of the regulator and the insurance industry. So as we keep on expanding the market, continue to penetrate the market, it will benefit the customers as well as insurance industry. So that's the whole thought process.
Sure. Also, I just want to talk a bit about your business outlook as well. And, what we are seeing is we believe that the price increase, which was taken by you during May 23, that was in Family Health Optima, which would yield some bit of a positive return in terms of your claims ratio. Now, when you look at it, the same was a bit higher when you compare it to Q3 versus your expectation of 63 to 65%. So do you think that we'll see an improvement in Q4 in this range of which you've guided for? What is it that one could expect there?
Yes. So to give a brief, we took a price increase in our flagship product, which is the Family Health Optima, effective May 23. And this was a price increase post-COVID where we have seen a higher impact of inflation. We expected that the renewals will be slightly lower because there is a price increase which customers generally don't take. A few of the customers don't take. The renewals are in line with our expectation, and we see a good 25% increase in the premium yield that we have taken. One has to understand these are one-year policies. Jan to March is the biggest quarter for us. We took the price increase effective May 23 for renewal portfolio. So the biggest portion of the portfolio will come for price increase in Jan to March. We are seeing very good benefits when it comes to the price increase that we've already taken. December on, we have said that this benefit will come in terms of earned premium from H2. And we see that December onwards, there is a good traction that is coming in terms of the yield improvement as well as the loss ratio improvement. if we see last year also, we have maintained that Q4 is the best quarter in terms of loss ratios for us as well as expense ratio. The full year guidance is compared to 9 months numbers. We have to wait for quarter 4. We see some good trends, and we believe that the overall loss ratio will be lower compared to 9 months loss ratio.
All right, you had also spoken about some price hikes during Q4 in the previous conference call. How much of an impact are you expecting that to have on your overall growth? Any sort of an indication maybe that you could give us?
Yes, so around 10% of the portfolio will go in for a price increase. Average price increase can be close to 15%, which will give us a benefit of around 2 to 2.5% in the next year. And that's a continuous process. Whenever we see that the loss ratios are touching a certain threshold level, we go in for a price increase.
Okay, and given that the street is a little bit concerned about growth, there have been some cautious calls by the management, I think, which resulted in a bit of a moderation growth. I'm just talking compared to your historical levels. Can you just, give us a final message to investors in terms of growth and what kind of a metric you're looking at? Are you remaining a little bit cautious? What are the factors that will help turn that cautiousness around?
So for the first 11 months, we have grown at 18%. This is very close to the market growth rate of around 20% on an overall health basis. When it comes to retail business, we continue to grow in line with the market and have maintained our market share. We want to reiterate that we have been giving a cautious stance, but we are seeing that there are definite improvement in our overall parameters, be it agency business, be it digital business. We'll continue to grow higher than the industry growth rate and continue to improve on a market share. If we compare last 5 years, we have increased our market share from 27% to 34%. This year, it is hovering around 34% mark. But with the kind of agency business that we have grown, with the kind of investments that we have made in our digital business, we have 50 plus banker partners. We are confident that we'll continue to grow higher than the market growth rate in the desired territories. This is about quality growth that we're talking about.
Okay, and what about your expense ratio now that most of Q4 is behind us? Any sort of directional update that you want to share here?
So when it comes to expense ratio, we continue to enjoy operating leverage. So in our agency business, which is our biggest business, we continue to make significant operating leverage benefits. We continue to invest in our digital and banker channels because digital channel requires huge upfront investment. We have added banker partners as well. We need to create an infrastructure for that. But on an overall basis, we'll continue to improve on our expense ratio, and we believe that around 0.5 to 1% improvement will come through in the next 3 to 5 years as well.
Okay, just finally, down the line, can you just walk us through what exactly is going to be the roadmap for growth in terms of what are going to be some of the key levers for growth, how you're looking at Bima Sugam aiding your overall profitability down the line?
So basically, we focus on 4 channels. Agency channel is the biggest channel for us. It will continue to grow. We continue to add around 80,000 to 1 lakh agents every year. We have strengthened our relationship with agency further. When it comes to digital business, today 8% of our business is contributed by digital. It's a channel growing at around 35% when it comes to fresh business. We are doubling down on the digital channel in the next year, and we believe that this is the channel which will go faster. Banker channel, again, as I said, we have 50 plus partners. This is 5% of our business, again, growing at 40% plus. We are adding new partners. Last 6 months, whatever partners we have added, we see a good traction. It takes time for integration. So that channel, again, is growing very well for us. The 4th pillar is the group business. Again, SME and SME continues to be the focus area for us. We see that there is some improvement in the market rates when it comes to group business. We are now focusing on mid-market category as well. For the month of February, this business had grown at 60% for us, and we have good plans for the coming years. So on all the 4 channels, we continue to grow very strong. And as we have given a news that we have added our offices in GIFT City, we see it as a huge potential for NRI business, for SEZ, IFC business, as well as foreign inward business. So that, again, is a new channel of growth for us. So yeah, all around, we see a good traction coming along.
We'll take your word for it. Thank you for taking time out and joining in and giving us an insight as to what exactly the growth roadmap is looking like, as well as some of your internal targets.
If you like this video, then like, share and subscribe to ET Now.